everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind there's risk involved with trading. There's no guarantee that any one trade will bring profits. So in one way or another, be sure you manage risk on each trade in a way that makes sense for you. We will go over some ideas in that regard with some of the tools that are built in to our web trader and app that make the risk management side of things quite a bit simpler. And as always, keep in mind that what we go over is not meant to be financial advisement, but it's coming from an educational perspective. Now, real quick from our main website, this is where we access the web trader from. You can trade on your MT4 and MT5 accounts from our web trader with the advanced functionalities available, same as what we have in our app as well, which allows you the advanced tools like signals, market news, etc. And so we can go real quick to where the links are for the app. And you can find our app in the major app stores, Google Play, Apple App Store, etc. And like I said, same functionalities on the app is what we're about to use in the web trader. So if we log in from the upper right corner here in our main website, we'll be in the web trader. And our focus today is fundamental analysis, and there's plenty of it to consider and look at. Tomorrow is the non-farm payroll announcement out of the US, one of the largest announcements each month really for any country. It's very highly traded. You get a lot of movement on the charts, a lot of reaction to what the numbers may or may not be, depending on the expectations and the actual results. And there's a lot of other data coming out along with the non-farm payroll numbers at the same time, wage growth numbers, unemployment figures, etc. And leading up to that today, we've got the advanced data payroll, as they call it. It's like an advanced look, an early look at the jobs data, a partial look based on a certain number of companies. And then the actual numbers then come out tomorrow. And so there should be quite a bit of movement today surrounding some of the announcements out of the US in particular. And so I think that's a good place to start. We'll obviously keep in mind the technical analysis of things. I had a session yesterday where we did a large focus on the technicals, but also considered the fundamentals that we just kind of alluded to. And some of the trades that we got into, one already closed in profit. It was a shorter term gold trade. We took another gold trade protected with AvaProtect, and then we shorted the US 500 with some of the fears about maybe recessionary numbers showing today and tomorrow. We'll see how bad the numbers are or are not, but there's some fear that the US in particular could be moving towards recessionary type data. So we'll see what happens, but the fear was our idea. The technicals looked nice, support and resistance levels and such for the moves yesterday, but also we backed that up with the fundamentals that there's a lot of fear out there right now. So going up with gold made sense to us. And then also shorting the equities because the fear just earlier this week brought the equities down with a strong sell-off. And so we thought the same thing could continue. So far it has a bit. We'll see if that continues. Now, if we go ahead and take a look at the economic calendar, we can get a feel for specifically around the upcoming announcements, how have the movements occurred in the past? Okay, so we'll qualify it. Which announcement? If it comes in better than expected, how are the movements in the past? If it comes in worse than expected, how are the movements in the past? So let's look at today's date. Okay, you can pick on the calendar the date range that you want to look at for announcements. You can pick the countries that you want. Okay, I've got the major economy countries basically chosen, maybe a few others. And I only look usually at the high level and medium level announcements. I leave the low ones off. So you see in this column, in terms of importance, medium and high level announcements only. The higher the importance level, the more you tend to get a reaction on the charts for the currency related to the country as the numbers come in. So for anyone who's brand new to an economic calendar, And there are lots of them out there with these basic columns of previous numbers, the forecasted numbers, what do they expect it to be, and then when the numbers came in today, how did they compare to the expected numbers? Okay, and we're seeing, slowdowns really across the globe. I mean, we want to look at these retail sales here, expected to be 9%, lower at 7.4% year over year. So the increase is decreasing in terms of these inflationary numbers. The retail sales month over month expected to drop to negative 0.4, dropped a lot more than that, negative 1.8. So we see a lot of data like that already came in. So that could be increasing anxiety already before the US announcements come in, okay? So as we then look at ADP employment change, okay, keep in mind the US dollar many times is a safe haven currency when there's fear, okay? It's why many times the stocks drop when there's fear, economic fear, because they're selling stocks and going into the US dollar, okay? A lot of times that's the default currency when stocks are being sold, US stocks, they're paid in US dollars. It's transferred into currency. And so as stocks sell, it many times has a strengthening effect on the US dollar. So something to keep in mind. Not always, but there's a connection there. The US dollar many times, like the Swiss franc and the Japanese yen, is sometimes thought of as a safe haven currency. Now, if we use these tools over here, which really are the advanced part of the economic calendar that you don't see in most places, let's look at this volatility tool surrounding the advanced data payroll announcement that's coming out in a little bit, okay, today. So we can look at any currency pairing we want involving the Euro USD that's offered at AvaTrade. We can look at different time frames after the past announcements. For now, we'll look at 4 hours after these past events. And we can qualify all events or only if they came in above or below forecast. You tend to get more predictable movement if the numbers come in worse than expected or better than expected. So if we look at the ADP employment change, advanced data payroll, and we say, okay, if this comes in above forecast, how has the market responded in the past with the Euro USD? And so if today's announcement comes in above forecast, you might expect a movement that tends to go upward. Look what happened in the past. Only twice did it drop when the ADP numbers were what we'd call better than expected, above forecast, more hiring than expected. The euro went up. You might think, well, that's strange. The US dollar, that sounds like good news for the US economy. Wouldn't that strengthen the USD? And maybe in normal times it would. But right now there's been so much fear about the jobs market in the US that if there are numbers that are better than expected, then maybe people leave the US dollar, which was maybe run into as a safe haven currency, and the US dollar can then weaken with the good news out of the US. Okay? There's no guarantee that'll happen this time. If the data comes in above forecast, maybe it does like one of these did where it dropped some. But we see in general, if we're going on the statistics, not only did the movement go up twice as often compared to going down when the numbers came in above forecast, went up 4 times and down only twice, but the movements up were much larger on average than the downward movements. So not only do you have a 2/3 chance based on the past that the euro will climb against the USD if this comes in above forecast, but you also have the statistics from the past showing that not only did it go up twice as often, but it went up further than the ones that went down. Okay, something like 95% of the movement was up, even if you include the ones that went down. Okay, a lot of green, very little red when the numbers came in above forecast. What if they come in below forecast? Okay, it looks more 50-50 when you look at the amount of green up and the amount of red down. Yeah, it went up a little more than down. Went up 3 times, down twice. That's not much of an advantage to me statistically, unless the green ones were much larger and the red ones were smaller, but that's not the case. And so we get a more muted response if this data comes in below forecast. And I think it's because the expectation is that it will come in below forecast. So it's not a big surprise. There's a lot of anticipation that the jobs market in the U.S. is finally slowing down as inflation came down first quite a bit. The jobs market had stayed strong. And they say jobs many times is a lagging indicator, meaning once things slow down, jobs tend to react last. And now finally we're seeing the jobs market slowing down in the U.S., which is keying the feds in the U.S. that, hey, maybe it's time to lower interest rates finally. Maybe we've got a handle on inflation now that jobs numbers are weakening as well. So it looks like the below forecast numbers have kind of a muted, more of a 50-50 response in terms of directionality and distance. But if this comes in above forecast, you see a vastly different result in the past statistics and even in the more recent numbers, okay, in the more recent announcements. So this is something that I'd be looking maybe to trade on because of the statistical significance, understanding it's statistics, so you're not going to win every time. But if you try strategies like this, say 10 times for each announcement, each week, each month as they come in, if you can win 6 and lose 4, that's a winning strategy, okay? If you can win like this shows, 4 out of 6 times, with those types of distance comparisons to stop loss compared to take profit, then you'd really be doing something well, okay? So this is the power of statistics. It's called data-driven trading, and this looks like something that I would be interested in trading if it comes in above forecast today. And you can see the direction I'd probably be interested. And you see after 4 hours, it's gone 42 pip plus range movement. Tells you over here, over 42 pips movement. You see these 3 up here are over 40 pips or right at 40 pips climb. Only one of them went less. So you know the general distance you might put your take profit, and the ones that dropped didn't drop much, so you know the general distance to put your stop loss maybe, okay? So you know that in advance, you can have it ready to go. And in the first 5 minutes after the numbers come in, you see the movement only went 5 pips on average. The largest movement was 10 pips, okay? That's this one. The rest were much less. So average of only 5 pips movement in the first 5 minutes, you have plenty of time to get your trade off in the first 5 minutes after the numbers came in, before the 4-hour movement goes nearly 40 pips the majority of the time in the past, okay? So it's not like once the numbers come in, the whole movement already occurred necessarily. You can see based on the past announcements, you had plenty of time to get your trades off to take advantage of a lot of this movement that continued over the next 4 hours, okay? So, and there are jobless claims coming out. I already took a peek at this, less of an effect, okay? If we look at above forecast, 2 up, 2 down, 50-50. If it comes in below forecast, 3 up, 5 down, and a muted response. Equal distances. It went down a little more often than up, but the distances are almost the same. So I'm less interested in trading on the results of the jobless claims and more interested in this ADP employment change based on the past data. It shows more predictable, larger movements, okay? And if anyone has questions, please, I am keeping an eye up there in the chat. Go ahead and pose them as we're going. And I'll address the questions as I see them. Or if you have some input that you want to give, please feel free to do so. And we can take a peek at tomorrow. Let's switch dates. We'll go to the 6th. The big day for the US. There are other announcements out of other countries, but because there's such a wait and see on the US announcements, because it's the non-farm payroll week, you might not see as strong of a reaction on the announcements that are occurring prior to the non-farm payroll. But we could take a look. Industrial production out of Germany. It's a high-level announcement. If this comes in above forecast, it drops 2/3 of the time, okay? Equal distances, though. When it went up just as much as it went down, but 2 times it dropped, 1 time up. I would like more data points than that, but it looks like it's trending towards the USD strengthening. If this is above forecast, I don't know if I would act on that. It doesn't make sense logically to me. If industrial production is better than expected in Germany, you'd think the euro would strengthen. And the fact that there's only one up and two down and equal distances, this data doesn't sell me. Below forecast, okay, distances are much larger down, and the directionality makes sense to me. If the industrial production is worse than expected, below forecast, the USD pulls the euro down. That makes sense. You know, bad economic news out of Germany, euro weakens against the USD. Now, it's 50-50 in terms of the number. 4 went up and 4 went down, but look at the difference in how far it went down each time compared to how far it went up. Okay? I like to see not the 50-50 percentage, but if I was going to trade on this, it looks like the momentum's down, and it makes sense fundamentally as well. That if there's bad production numbers, the euro would weaken. Okay? And so if I was trading, I would probably wait and see if this comes in below forecast. If I could get an entry point I like, I'd probably sell based on this data. But if it comes in above forecast, I'd probably sit it out. It's not strong enough look for me here in terms of difference between upward movement and downward movement from the past. Okay? And each trader will analyze this a little different. And you could switch currency pairings as well, and you might see a better response on some announcements with maybe Euro GBP or a different currency pairing when we're talking about Germany. So Euro GBP pairing, okay, it's even more confusing, right? It went up twice and down once, but the one that went down was much larger than the ones that went up. So this thoroughly confuses you on this announcement. And if it comes in below forecast, it looks just like the Euro USD, much more downward movement than up. And the percentage now is on your side too. So the movements go down 75% of the time on the Euro GBP, with the movements maybe not any larger than the one that went up, but much more numerous. With the Euro USD pairing, the movements were 50-50 up and down, but the movements were much larger down. So both pairings are trending that if it comes in below forecast, you get more downward movement than up. Okay, larger in this case with the Euro USD, or a higher percentage with the Euro GBP down if it comes in below forecast. So I would be selective on this one and maybe only be interested in shorting this if it comes in below forecast. The above forecast just doesn't convince me of anything. Okay. But again, if it's not ideal, you don't have to trade on it at all. I don't think either direction was really ideal here because we didn't have good percentages and distance at the same time. Okay, but you could qualify the ones you'd want to trade on. So far, the ADP announcements coming in today, I like the look of that. One of the other announcements we looked at for today looked good. And let's scroll down and take a look if tomorrow's U.S. announcements, non-farm payroll, that's the big one. You see the last numbers came in quite low. I mean, a healthy economy in the U.S. is usually even above 300,000 jobs created each month. It was at a measly 114,000. You know, when you're talking, 330 million people, 114,000 jobs created is maybe not even keeping up with the number of people who lost jobs. Okay, the unemployment rate ticked up last month in the U.S. unexpectedly with this low job creation. So now the expectation is larger, but still relatively low. If the numbers come in below this 160,000 by any significant amount, and certainly if it comes in below 114,000, we could see a big reaction in the markets, okay? And it may be a fear response if these numbers come in too low, because there's a lot of fear that the U.S. could be headed towards recessionary type situation. You know, the interest rates were raised to cause economic pain, to bring down inflation, but the interest rates have stayed up for so long now, it's hurting the housing sector, it's hurting the retail sector, the production sector, the auto sector, on and on and on. And so, you know, they're itching to lower the interest rates in the U.S. Before these numbers get too bad. And they're already starting to look ugly. We'll see what happens with the non-farm payroll numbers, but you can see why there's fear leading up to tomorrow's announcements out of the U.S. And so that's why shorting the U.S. 500 seemed to make sense yesterday. We saw that position at least a while ago was in the money, or buying on gold made sense as a safe haven, and you see that that's was up in the money. Okay, so combining the fundamentals leading up to the announcements helped yesterday, and now we're looking at the actual announcements as they come in to see how can we take advantage of the fundamentals of the actual numbers rather than the fear leading up to them. And so non-farm payrolls, let's look how they've come in the past with the advanced tools here. Euro USD seems to be the most stable pairing for analyzing the past movements with these announcements. But you do tend to get larger movements on USD JPY or GBP USD, but a bit more volatile too. So you can try different currency pairings with this strategy and see which ones you like the best. So non-farm payroll, if this comes in above forecast, okay, we see 50-50 movement, and that's largely because there's a lot of volatility with this announcement, but you do see percentage-wise the amount of red on the board compared to the amount of green. The USD strengthens if these job numbers are better than expected. Okay, you see a lot more downward red movement, average range movement, 74 pips. Okay, and you see these two down here. This one dropped 85 pips. This one over here dropped into the 90s. Okay, so we're talking significant dropping compared to the upward movement. On average, over 74 pip range movement down. It was 50-50, but your stop loss wouldn't have to be very far to avoid getting hit in the first in these upward movements potentially, and your take profits could be further down after 4 hours, with some of them being quite significant. It's not the strongest data I've seen, but it trends down more than up here in terms of the amount of red on the board with these past announcements if the numbers come in above forecast or better than expected. Okay, and it makes sense. USD would strengthen if the jobs numbers are better than expected. Why would it strengthen? Less likelihood to lower interest rates if the data is still really strong. Okay, there's a fear if they lower interest rates too soon, inflation will come back. So they're looking for the jobs numbers to be bad before they're convinced that, okay, now it's time to lower interest rates. So if the jobs numbers come in above forecast, it makes sense that the USD would strengthen a bit more than it would weaken, statistically speaking. Okay, what if this comes in below forecast? The exact opposite. And it's always nice to see that it's the flip result if the numbers come in the opposite. And so when it came in above forecast, it was trending down. It comes in below forecast, 100% of the time it went up, okay, in the data that's being evaluated over the past year. So, and again, similar distance, 77 pips or so average range movement. Okay, some of them were more than 77, one was less, but there tends to be a weakening of the USD if this data comes in below forecast. Why? We talked about it. If this data comes in weak again, then everyone's going to assume, for sure the US is going to lower interest rates multiple times this year. And so they're already alluding to the fact that many believe the US will lower 1/4 of a point to 1/2 a point off the interest rate in the next FOMC meeting, and that they'll lower up to 1 full percentage point by the end of the year. And so if this data comes in below forecast, meaning a bigger slowdown in jobs than expected, then it makes sense the USD would weaken. And so again, when I can align the fundamentals in my head with the proof of the data from the past, below forecast makes sense the USD would weaken, and the data shows 100% of the time, the last few times that this happened, that's what happened. Now this is something I might be interested in trading on. So I think I'm more interested in buying if it comes below forecast. If it comes above forecast, it's more cloudy. I'm less convinced because it was 50-50 and the distances, yeah, and a couple of them went further, but a couple of them barely moved after 4 hours. Okay, so I'm looking to qualify this if I'm trading on this announcement based on this past data. The below forecast looks better. If the jobs come in below that already low expected number, it looks like you could have pretty good certainty in your mind that maybe the euro will climb significantly against the USD in the hours after that. Okay, and again, 77 pips after 4 hours. In the first 5 minutes, average range movement 44 pips. So and it doesn't take you 5 minutes to get a trade off. So maybe you can get in after 20 pips movement, 10 pips movement. Maybe it spikes down and you catch a lower point in the first 5 minutes before getting your trade off if this comes in below forecast and you're wanting to buy. But even if you got in after 44 pips movement, after 4 hours, it was 77 pips movement. So even in the worst case scenario, you gain 30, 35 pips profit still on average. Okay, we're talking averages here. But you probably could do better than that if you're patient with your entry point in those first 5 minutes. Okay. I'll pause for a moment. Any questions, comments before we move on to maybe the market buzz, a different tool? Okay, I don't see any questions popping up. And there are other announcements tomorrow too. I suggest each week on maybe Saturday, Sunday, when the market's not moving, except for cryptos, you could plan your upcoming week as to what announcements you're going to be able to have the time to watch as the numbers come in, and already know which ones you're interested on trading in which direction based on how the numbers come in. Just like we just did, I know which ones I'm interested in, and only in some cases one direction if they come in a certain way. And I already have my plan of how far my take profit will be based on the past movements, how far my stop loss would be away, etc. My plan for the week is set in advance before the week starts based on analyzing these announcements that are upcoming in advance. So you could look at the Canadian announcements as well, see if any of them look good statistically. And earlier in the week, there were big announcements out of the European Union, Great Britain, Australia, etc. Okay, you could find 10 or 15 trades that you might be highly interested in each week, that the statistics look very predictable based on how the past announcements came in. Maybe you can trade 5 or 10 of those each week and see after 3 months, 4 months, 5 months, which ones are giving you the best returns. And then you start to, own in on the ones that you do best on maybe, and then you've got a working strategy for trading announcements, okay? And that can be just part of your fundamental analysis trading. That's one aspect of it. Another aspect could be looking at the actual news. So we have a tool. First of all, we have the news feed. The news feed summarizes all of the data that we have and lists instruments that might be related to that data. So crude oil, gold, different gold futures contracts related to this information. So clearly this information, the analysts at Trading Central feel will affect the movement of the commodities, gold and crude oil. Okay, so you can read through it. This summarizes information about announcements that already happened or that are upcoming, about news headlines that happened, and give you an idea of what you might want to do with these instruments. Okay, that's if you don't have the time to look at the calendar and read the news articles yourself. Okay, gives you a summary. It might give you ideas as to what then you want to look at closer in the market buzz as well. I see NVIDIA was mentioned in that article, probably about the fact that there's been a lot of bearish pressure and NVIDIA has been dropping a lot because of fears of an economic slowdown. Then there's probably fears that less chips will be required from NVIDIA, from all these different companies that are buying their AI chips and other products. And so there's a lot of bearish pressure on NVIDIA. And then a lot of the other companies follow suit with a fear response. Stocks start to sell off and follow NVIDIA down after they followed it up for the past year and a half. So you can start to look and see, well, I saw NVIDIA was mentioned in that news feed that we had up a second ago. So maybe you say, okay, and NVIDIA is trending huge in the market buzz. So let me read what's found in the market buzz by clicking on NVIDIA and see what loads. What am I going to find in the news feed that's dedicated to NVIDIA? And so Qualcomm CEO discusses AI on the edge. Okay, you might read that, see, well, what's going on with Qualcomm? Are they a competitor of NVIDIA? Are they putting pressure on NVIDIA? So sometimes the articles aren't directly related to NVIDIA, but they're related through another company. So you can read what's going on with Qualcomm. What does it have to do with NVIDIA? We can scroll down and see any article here. They're talking about AI chip market growth. Okay, that's a huge sector for NVIDIA. So you click on that, you read. What's the expectation? Maybe they're talking about the growth in the short term to slow down, to still grow, but grow not as fast, which is some of the reports I've heard. So you can start to click on the articles. Is NVIDIA Corporation the best augmented reality stock to buy? You can click on the article, read a summary. You also can click story continues and read the whole article from the source that it was found. Okay, you can read the entire article and start to get a better idea about what you're trading on from a fundamental news perspective. Okay, and so maybe you find articles that convince you of what you were already suspecting, that there's fear on the market. There's fear about tomorrow's announcements out of the US. There's bearish pressure on the stock market overall. And then maybe you see the technical trend here says price may fall over 30%. You click on the technical trend for NVIDIA and you see they're showing basically a crash on NVIDIA with potential 30% drop all the way down below 100 to the low 90s is the prediction here from Trading Central. As long as it doesn't go back above this blue line, which they call the pivot point, you could have your stop loss just above the pivot point. If it goes above there, they say it could keep climbing, that something must have changed in the fundamentals for it to go above this resistance level. So if you're selling, you put your stop loss above the pivot and your take profit down at the suggested take profits. So now we start to have a checklist of items. You read articles, maybe they're negative about NVIDIA's current market anyways, or less positive anyways. We look at announcements and we understand there's fear of economic recession maybe from some of the recent announcements. And then you look and you see the technical trend also shows a downtrend and expected large drop. So now you're reaching what we call a trading strategy, not just a trading tool. Okay, the economic calendar is one trading tool. The news feed is another trading tool. The market buzz is another tool, and the technical trend analysis is another tool. If all of those tools in your checklist start to tell you the same thing, in this case, maybe short NVIDIA, then maybe you're convinced of it and you make that move. Now, I will tell you, NVIDIA already dropped like 20 or 30% in the past couple of weeks, okay? Or 15 or 20% anyways, depending on where the price closed yesterday. But just this week, I saw a 10% drop in NVIDIA. So some of this 30% drop may have already occurred, but look at the current price when the market opens and look at the signal, and you can see if the signal agrees with selling still. So now you've got a technical piece to go along with your fundamental analysis as well, okay, to see if all of those things agree with each other. And if 3 out of 4 things on your checklist agree, then maybe you make the move. Okay, and we can look at a lot of different, really every instrument that we offer, even the cryptocurrencies, the standard currency pairings, the commodities. You can find articles on all of them. Okay, and some of the smaller ones, just because they're not buzzing as much, doesn't mean you can't trade on them. Johnson & Johnson, Microsoft, Apple. There's plenty to read about all of the instruments, regardless of whether it's the largest circle or not. Gold is trending a lot because it's a safe haven. We could read about gold, click on it, see what's happening, and see what's the trend analysis. We know there's been a lot of fear. We know gold has been trying to push up. Here's some articles we can read about gold. It's up a little bit today already, and I don't see the trend analysis loading. There's not always a trend analysis available on every instrument, but most of them have it. Let me refresh the page and see if one loads. Sometimes refreshing brings some more information on, but it could be there's just not a signal right now, or a trend analysis on gold in this section. So, it went back to stocks. It defaulted back to stocks. Let's go back to gold, see if we can find a trend analysis. If not, we can always look in the signals section. So I don't see the trend analysis loading, but we can still read articles about it. And then if we go to the main section, we could pull up gold. Go to favorites maybe. And gold has a signal. So you get your trend analysis here anyways. Here's gold. This is a shorter term analysis, but it's what I suspected. The signal says buy. Okay, so now you can start to qualify the technical signals with what you just reviewed about the fundamentals. What did we review about the fundamentals? There's fear of recession. Some of the numbers already came in today out of European Union, UK, showing slowdown more than expected in retail sales, other areas of the economy. Yesterday, the US had numbers that came in worse than expected as well. And there's fear that the current numbers today and tomorrow might follow suit. So it makes sense fundamentally that a safe haven like gold might climb. So we already have an idea about the fundamentals with gold. And then we look and the signal backs that up, saying the technical analysis expects a climb up towards 25 or higher. So then that might help you, convince you to make the trade. Now the technical analysis shows it already climbed, and perhaps you would rather get in closer to the pivot line. So maybe if this pulls back towards the pivot line, you have a pending order to buy from just above the pivot with your stop loss just below the pivot, so that if it breaks below, you only take a small loss. And if it bounces again off the pivot line, you have all this profit potential up to the suggested take profit. Now, it might not pull back. If you put a pending order down here, for example, to buy with this signal, maybe it just keeps climbing and hits the take profit zone without pulling back. So, you could do a split idea as well. You could do a buy, partial market buy from the current price, and also a pending order if it does pull back to the pivot level to get in a second time from a better price. So it's just some ideas of how you can use the fundamental expectation with the technical signal to figure out entry points for the direction that the fundamentals maybe tell you should trade. Okay, so you see how I'm selective with how I would use the signal. Just because it still says buy doesn't mean I'm going to buy right now. Like I showed you, I bought yesterday on gold because it was closer to that support level, the pivot line yesterday. And so we see it's already up almost 800 in profit. Okay, I paid for protection, so I can carry this through tomorrow's announcements risk-free. Okay, I just had to pay the cost of the protection up front. I already could close this in an overall profit. The protection was only 600. So I already have an overall profit on that. But I'm going to let it ride because I think fear could continue, and gold is a safe haven. There's no guarantees, but you see how you can use the fundamentals and the technicals together to have a full plan to trade in the direction and from the entry points that make the most sense. Okay. Any questions, comments before I end things? I think this is a good place to stop. Okay, great. I must have been clear, and I didn't see anyone drop out while we're going along, so I must have been interesting enough as well. So that's a good thing. Thank you all for joining. Good luck with your trading today and tomorrow. I think there'll be a ton of opportunity to go after profits. Just be careful about risk management, and maybe you use AvaProtect on some items, maybe stop losses, etc. But certainly there's going to be some large opportunities, and maybe you take advantage of some of the strategies that we just looked at to assist you with your decision making. All right, everybody, thank you, and good luck with the trading. Bye for now.